doing the direct invite on my end. So we're going to deal mainly just with the SBA loan programs today, and focusing really just on the main SBA loan program, which is the 7A. Let me see. I think I need to get closer to the laptop here. Our technology sometimes is funny. Well, you know what? There you go. Okay, so this is the brief agenda that we're going to be going over. Who is SBA? What's an SBA loan? Some of the benefits. What's the eligibility requirements? What's required in maybe loosely the credit underwriting parameters, and what is sort of needed in a loan package application. So these are some of the areas that we'll be focusing on. Quick little history on the SBA. It is a federal government agency. We were founded in 1953 when President Dwight Eisenhower signed something called the Small Business Act. And ever since then, it's the only federal agency in the country that's exclusively dedicated to the health and the promotion of small businesses. We have the U.S. Department of Commerce out there, but they function as the overwhelming agency that deals with all business functions locally, domestic, and internationally for the best interest of the U.S. However, SBA specifically focuses on small business support. And ever since then, our mission is pretty much the same. So what's an SBA loan? A lot of misconceptions out there, right? It's a grant or it's a personal loan. Think of an SBA loan as a business loan. It's a business loan provided by an approved SBA lender such as East Central. We also have a couple of approved SBA lenders here, certified development companies as well. So it's not channeled through us, it's channeled through directly by an approved SBA lender. What is our involvement? We create the rules, and they follow the rules, the approved SBA lenders. Not only do they follow the rules, if the loan should ever maybe go south, and hopefully that never happens, the U.S. government partially guarantees the loan. So that's basically in a nutshell what an SBA loan's about. So an SBA loan, typical scenario, in a perfect world, what happens is a lender will review a basic application from an applicant being a current business owner or a prospective business owner. And it's up to the lender to make the decision whether you, with your requests, might work better in a normal business loan, or what we call a conventional business loan, or if some certain parameters within maybe your business, your history, might not meet the standards of a conventional loan. That's when ideally the lender will share with you the SBA loan program. Some of you have home mortgages, right? Okay, so we know in the home mortgage world, there's conventional home mortgages and there's something called like FHA, right? FHA is the government-backed sort of government rule program that allows you maybe with a smaller down payment requirement. The credit underwriting criteria might be a little bit more lenient. So think of SBA as the FHA loan in the business community, in the business lending community. So benefits to borrowers, benefits to all of you as business owners or prospective business owners, is that you get financing as a credit-worthy small business that you may not normally obtain approval for financing if it's a normal conventional loan. Because, like I said earlier, the conventional business loan typically has a higher level of standard. So the benefits is you receive the financing. The financing amount actually could be quite greater in an SBA loan program, up to say 90% financing, and especially on commercial real estate loans. Longer terms, of course, mean smaller loan payments, smaller monthly loan payments. And unlike maybe certain conventional loans that have a lot of different terms and conditions and resets and other areas that might be convoluted for a lot of us, the SBA loan program, being a business loan program that's following government rules, is very plain vanilla. And by plain vanilla, I mean it's fully amortized, right? If it's a 25-year amortized loan, it's termed at 25 years, so special commercial real estate. There's no funny business of it ballooning, as they say, at 10 years, and then you have to pay the whole loan up. So very plain vanilla when it comes to the rules, because of the sake that it needs to be fully transparent and fully simple for the mass consumption of our small business community. And the last bullet point here is worth noting that the SBA rules allow a lender to channel and promote an SBA loan under the premise of being more flexible for certain special purpose projects or special purpose requests. In a normal conventional world, certain things like gas stations, certain things like car washes, dry cleaning, hotels, restaurants, those are all kind of considered in a category and bucket of high-risk industries or high-risk businesses. But the rules and regs as how it's written with the government is that we're kind of giving the latitude for an approved SBA lender to kind of look into those areas. We're almost encouraging them, hey, don't disregard these industries. We want you to fully look into these industries. So we allow for these industries to be considered, which again gives the ability for that access to capital to the small business community. So the primary eligibility for SBA loans, primarily you have to be an operating business. You can't be a dormant, inactive business. You have to be a for-profit, so nonprofits unfortunately do not qualify. It has to be your main operation, and most of its operation needs to be here in the U.S., in the United States. And you have to be small based on our regulatory requirement, which essentially is you can't exceed $5 million in net income over the average of the last 2 years and have a net worth of over $15 million. 99.9% of all the small businesses fall under that criteria. So fear not, if you're a small business, you're probably qualified as the definition of small business under the government rules. So some of the no's. We can't allow the lending of the program for other lenders, right? So you can't, if you're some sort of small loan brokerage outfit, you can't apply for an SBA loan because the loan can't be therefore lent out again, right? So we can't lend to lending financing companies. No illegal activity, I'll get back to that. No gambling, that goes without saying. No products of sexual nature, that's Star Wars strip club, right? Completely a naysayer. I'm not sure in Tatooine, maybe that's a different story. They have other governing rules. That's not Star Wars club. I guess we only have a few Star Wars fans here. So no private clubs, right? That's because of the discriminatory issue. All the protected classes in the 1964 Civil Acts, right, we have to abide by, right? Which is also a regulatory requirement for credit unions and banks, which is the Equal Credit Opportunity Act. So all of the protected classes have to be fairly applied as far as the ability to obtain credit. So if there is a private club that's only, I don't know, males only or what have you, there's a form of discriminatory practice. So anything discriminatory in nature against the protected classes outlined in the 1964 Civil Rights Act, it's not eligible for SBA lending. That makes sense, right? Okay. So, and no primary religious teachings. However, meaning if it's a bookstore that's a religious bookstore, that can prove that, hey, I'm selling not just literature within the Christianity faith, but I have some literature within the Islamic faith and so forth, then you can still maybe look into that. But if it's exclusively like one religion and no others, that can fall under the ineligible category. And no illegal activity. An example of an illegal activity actually by federal statute is marijuana in all its forms, right? So marijuana in all its forms, and I say that because that's a sensitive topic today in the state of California. Marijuana in all its form, recreational and medicinal, is considered illegal by federal law. It's considered illegal by federal law. And I'll let the legalese figure out what supersedes what. But technically the DEA, right, is a federal enforcement agency, can still bust you if you're smoking marijuana. Because federally speaking, it's illegal. Therefore, under SBA government rules, we cannot lend out and have any interactions with businesses that are even doing illegal acts that might be illegal by federal statute, but legal by state statute. So that is something to keep in mind. And you'll be hard-pressed to find a bank or a credit union that's federally insured to bank a marijuana dispensary or marijuana business. Because, again, they're federally insured and federally regulated. So they have to abide by federal laws and statutes. So quickly here, we're going to just briefly kind of go over the main flagship program under the SBA is called a 7A program. And it's a program that's up to $5 million. And as you can see, has several use of proceeds. Pretty much the uses of proceeds that you could use for the 7A can actually encapsulate and meet the demands of most small businesses. Anything from the purchase of machinery and equipment, working capital, refinancing existing business debt, leasehold improvements, or what we might call tenant improvements, purchase or the construction of commercial real estate, and even the purchase of another business, a change of ownership, a partner buyout, business acquisition. These are all things that can be done under the 7A program. So it's a flagship program because it pretty much can meet the need of most small business requests, especially when it comes to lending. The guarantee loan program terms loosely is going to be based on the use of proceeds and the ability to repay. As a nutshell, up to 10 years term for working capital, 7 to 10 years for machinery and equipment, and up to 25 years for commercial real estate. And how it's weighted is the average of the multiple uses. But if 51% of the loan is connected to commercial real estate, then the rate can be actually connected to that commercial real estate rate. And I'm not going to go into too much of the weeds because it gets a little wonkish, but we can talk about that during the Q&A, and you'll have my contact information, including Jennifer's, for any questions via email or phone. Interest rates, we're not going to talk too much about this, but keep in mind that most SBA 7A loans, which is the primary flagship program, is going to be based on a variable rate, and the variable rate that's most commonly used is considered the Wall Street Journal prime rate, which currently stands at about 4.5%. But as we know, in the last couple of years, the Federal Reserve has been slowly increasing rates, right? So it used to be like a 3.25, right, for like 5-6 years straight. In the last 24 plus months, the Feds have been increasing rates, so now the prime rate's at 4.5%. And this is some of the guidelines as far as like the maximum spread or the cushion that can be added toward on top of the base rate. So my final slide before I transition to Jennifer here is small business resources. So the SBA has 3 official small business resource partners. One's called the Small Business Development Centers, one's called the SCORE chapters, and the other is Women Business Centers. They're kind of self-explanatory with their various description underneath each bullet point. In essence, they're providing technical assistance free of charge, advisory counseling work free of charge to the small business community. For instance, the Small Business Development Centers, the first one there, they have a lot of different almost consultants that you don't have to pay a dime, and they'll provide you counseling assistance from A to Z. They could even help you put together a loan package for presentation purposes to a lender. The SCORE chapters do similar work. They're probably on more the ground level, helping especially those that want to be potential entrepreneurs, those that maybe want to start a business or want a little direction on where to go. And the Women Business Centers basically can capture the services of the previous 2 resource partners, but there's a sort of a gear leaning toward women-based businesses, women-owned based businesses. So those are the various websites. And I should also say, prior to this, when we were talking about the SBA loan programs, the 7A is the primary flagship vehicle, but there is a second major program due to the time we couldn't cover it, but it's called the SBA 504 program. And the 504 program is mainly for commercial real estate financing, and we do actually have a couple of members here in the audience that are part of a certified development company. Can you stand, please? I think I see John and Anne-Marie. So they can channel the SBA 504 program and give you a full explanation on how that works as well. So that's in a nutshell the SBA loan programs, and I'm going to hand it over now to Jennifer as she discusses kind of the process of applying for a loan.
Thank you, Andrew.
Just do it here.
Okay. Hi, good morning, everyone. I'm Jennifer J. I'm with National Credit Union. Okay. Not used to. I'm usually behind the desk all the time, so I don't get out much. And I am a loan underwriter. I do receive applications for small businesses. I review them. I've been doing this for about 15 years. I've seen a lot of existing businesses and new businesses come across my desk. I've been able to speak to a lot of small business owners and kind of educate them on what the process is of obtaining whether a conventional loan or an SBA loan, and kind of letting them decide what route to take. So I'll go over some bullet points just so you can have an idea of, when deciding for financing, what fits your present goal or future goal, short term, long term. So with that, an advantage of obtaining a small business loan, I guess, compared to the other option, which is venture capital or taking on an investor. The obvious one is maintaining control over your business. With lenders, once you get the loan, we really don't have a say after you get the loan to direct you in what direction you take. That's kind of outlined in a business plan or a discussion, or with the needs of proceeds. If you're going to grow your business, I would discuss with you what your needs are, and it's up to you to take those proceeds and flourish with your future goals. So yes, we don't have a say in your business, and we're not entitled to your profits. So whatever you make is yours. All we require is that you pay back the loan as agreed in the promissory note, and also to provide annual financials. That's different from what, let's say when you get a home loan, you don't provide your tax returns every year. It's only at a loan origination that you do that. And I see this as an advantage because you're connected with your lender on an annual basis. And so as a loan underwriter and a servicer, every year I would review financials and to see how your business is doing. If something is kind of not what you had predicted or projected, or things aren't going as planned, lenders like to see what's going on just so that we can assist, not to badger or force anything upon you. It would just, so let's say you're having a little difficulty because of seasonality, maybe this is a bad season, we can work with you to maybe change the payment terms, maybe give interest only, something like that. So it's just basically just keeping in touch with your lender, letting us know how you're doing. And another advantage is to grow your relationship, a banking relationship with a lender. So typically, when I look at a loan application, I see other maybe opportunities for your bank or your business to take advantage of other products within our lending institution. And so that those are some advantages of getting a loan versus going the other route, which would probably restrict you from any decision-making process. Okay, so some disadvantages. Yeah, you do have to pay back the loan. It's a monthly payment, and I realize that when you're in a startup mode, profits probably will not come in immediately, and so I do take a look at other sources of payment, whether you have outside income, or probably making repayment terms begin based on when you think profits will come in, and that's on a startup basis. For existing businesses, I just look at the cash flow of the business either on a monthly or annual basis, and that comes out when I review financials. Collateral. I know, as being a lender for many years, I do tend to look at collateral, and I do also loans unsecured, but it just depends on the business, the whole package, and just reviewing. And business loans are more subjective than I would say a consumer loan, because we have a consumer loan department, and I see that sometimes numbers are put into a spreadsheet or something and see what pops out. This is more subjective. So I do get to know the small business. I do talk to the small business owner one-on-one and just see, what is there. And collateral, we'll see what is there collateral-wise. It could be your business assets. We could take a lien on a piece of equipment, or if you have some excess equity in a property, that could be taken. But also, SBA does not require collateral. Most of the time, they are a cash flow lender, and that's why we tend to turn to the SBA program if there is a lack of collateral or additional security. With business loans, especially in a startup, we do require equity injection. So it's what we call skin in the game. So just to see how personally committed or personally you have placed into the business. In our minds, it's probably, if someone's personally invested, it would be less likely that someone will walk away from a business. And also a personal guarantee that's required by most lenders by the owners. That's a disadvantage because the borrower would be the business, and then you would personally guarantee the loan. And there are possible loan covenants and restrictions, like you might have to keep a certain deposit amount in the account just to mitigate some other weakness in the credit. These are just some applications. These are basic. So across the board, when you apply for a business loan, these are the basic requirements. Obviously, if you're a startup company, you're not going to have historical tax returns or business financial statements. So we look to a business plan or projections. We also want to see what type of entity you formed. That's up between your CPA to decide, and also to see the ownership breakout. Okay. And the last thing, the 5 C's of credit. I don't know if anyone's familiar with this. This is basically what I go by when looking at an application and then presenting it to the decision makers at the lending institution. So capacity of your repayment source, and we generally would like it to come from the business. Capital, again, a personal investment, your injection. Collateral, as we discussed, and character. Character is really important because in discussing with one-on-one the person, we do consider experience and conditions. So kind of see if you're going into an industry or in an industry that maybe will be obsolete at some point, so that we kind of take a look at that. We do a little bit industry research, and also that comes out in the business plan if you are a startup. And kind of a lot of information, and it's basically when you do apply for a business loan, any lender, I would say any small lending institution will talk with you and go by the requirements and go through the requirements and discuss with you different options, whether it be a conventional route or the SBA route. So thank you. I think that made my time, and so we're opening up for Q&A. Thank you so much for having us.
Thank you, Jennifer. Thank you. Great presentation. So we're going to open up to Q&A. I'll pass the mic to John. He's going to walk around. If you have a question, raise your hand. If you get the mic, please, whatever question you ask, make sure it ends in a question mark, because we don't want to talk about stories of loans that have gone bad, business ideas you have, those kinds of things. And I'm thinking if T left, I'm guessing now that we've heard the presentation, the Star Wars themed dispensary is out. Anyway, John, here you go.
Thank you very much. Could you discuss only the SBA loan? Could you describe some of the other programs that are available in addition to the loan lending program?
Yeah, I'll
I'll start off from a high level, and then Jennifer can actually describe some other programs probably within the East Central. So other SBA programs, I think that's basically
Mainly for startups.
Mainly for startup. Okay, well that's pretty easy. I mean, the 7A program is all-encompassing for mature businesses, startup businesses. Under the 7A program, we have some, I would say, sub-programs, even related programs like the Community Advantage Program. And Anne-Marie here from CDC Small Business Finance is one such approved lender in our local market that can do the Community Advantage Program. These are maybe smaller loan programs up to $250,000. There's other sub-programs that I think even East Central could do called the Express. That's up to $350,000. Some of the criteria for those sub-programs might be a little bit more lenient, if I could safely say that, because it may require less government documentations and forms and more internal documentations and forms that East Central could do, or CDC Small Business Finance can do it. TMC, I don't think that's a Community Advantage. Do you do Community Advantage?
We do.
You do. Okay, so I apologize for that, John. So TMC Financing, which is another CDC, also does Community Advantage, right? So there are a lot of the different like sub-programs. Best thing is you talk to us and we can kind of figure out what is the best suitable program for you. But those have the ability, like this normal 7A, to make consideration for startup businesses. And Jennifer, do you have anything else to add?
Yeah, in startups, and I've done quite a few, probably in the last couple years, it's fallen into the 7A program. There's a lot more flexibility, and the guarantee is a little bit higher because startups are considered risky for any lender. So I would say the 7A program. I guess there's other, like Andrew mentioned, there are other programs that have different requirements, but I think to a lender typically it would be the SBA 7A program is what we discussed.
And keep in mind the small business resource partners that I mentioned during the presentation. They can help guide you and even figure out maybe the best route and help you package a loan together, or what they call help you package a loan proposal package, where they could help you with the projections, the business plan, and all that. And again, 100% free of charge. It's one of the gems of our country to have small business resources, advisors, counselors, consultants that do this type of work free of charge, all funded by the government. Funded actually by all of you, right, through the taxpayer community.
Over there.
Good morning. Thank you for the information. Jennifer, you mentioned that the loan review process is somewhat subjective. So if a loan application for an SBA loan, for example, were declined by one vendor, would it be advisable to go to other vendors to see if that review process might look a little different?
Yes, I would highly recommend that because each lender is different. Each lender does look at credit slightly different, or maybe has experience in a certain industry. So yeah, I do highly recommend that. And also the slide that I showed with the business application with showing tax returns or personal financial statement, those are basic from bank to bank to bank. So if you have a package ready, you could basically send it out to certain banks and have them look at it and then come back with a discussion or a decline, or let's see what we can do. So it's not a long process, but I do recommend it. From different lending institutions that I've been to, I've noticed that maybe I could have done it at one institution, and the other one where they're like, no, this is not, we don't have an appetite for this. So it's different. And there's also a difference between larger lending institutions, like, I won't say their names, and small community banks and now credit unions. So yeah, I would say every lending institution looks at the industry or criteria different.
And I mean, from the government standpoint, we don't have a dog in the fight, right? We want lending to occur. We want the availability of capital and the access to capital to occur, especially in this very favorable environment. It's a very favorable time to be a small business owner. It's a very favorable time to look into small business lending, despite what your personal thoughts might be about the issues maybe happening from the news media or DC. It's a very favorable time to be a small business owner, a very favorable time to look into small business lending. So my advice is always look at more than one option, more than one lender. Through SBA.gov, you could go through something called Lender Match, and it can connect you like a lending tree thing to various lenders. But if you have personal relationships, whether it be with eCentral, whether it be with CDC Small Business Finance or TMC Financing, talk to all three, right? Because the basic package that Jennifer outlined in her presentation is the same package that every lender will be looking at.
Can I just add really quickly, just
Sure.
specifically to the SBA loan itself? If that were declined by one vendor because it's a government-funded program, would it again make sense to go to another vendor if the SBA loan through one was declined? That's, I guess, more general my question.
So that's a good question. I don't want to get into the mechanics and the wonkish kind of component that happens behind a scene, but during the pre-qualification stage by a lender, whether it again be eCentral, CDC Small Business, or TMC, during the pre-qualification stage, they should make a determination within 48 to 72 hours saying, hey, you know what, I think we could do this deal, or I don't think so. At that point, they should not be triggering something to SBA to pull like an authorization number, right? And again, I don't want to get into the weeds. So that's where I think you have to take control as a business owner and a prospective borrower. You have to take control when it comes to the loan application process, because it's really your situation at hand, right? You got to have a full, transparent discussion with the lender and be frank and say, hey, don't waste my time, don't waste your time. Let's see where we're at. Let's go through the pre-qualification. If you think this can fly, let's fly. Let's move forward. But again, concurrently, I would always say try to talk to 2 or 3 other lenders concurrently too. Same package is required, so you don't have to reinvent the wheel. But it shouldn't get to a point where they pull, again, wonkish, something called like an SBA authorization that then puts you in a little predicament where you have to wait several months before you can apply again for an SBA loan. That's where your communication, your fervent, strong, open communication with the lender needs to be at hand right from the get-go. Yes, question.
So are all owners of the company required to be on the application and sign the loan? Or I own 81% and I'm not sure my 19% would, you might not even want them, but
Right.
So is it even a possibility to apply?
So all owners need to be somehow captured. So you're 81%, let's say, of the business. You definitely have to be a guarantor, right? You have to issue what we call a personal guarantee. The 19% owner may also still need to provide a personal guarantee. And again, not to get into the weeds, but this is a newer rule that's now in place. But it also depends on this other owner. If this other owner that's 19%, or let's say 2%, doesn't really have much of a business involvement, then it's a case-by-case basis. But essentially, we need to capture all owners of a business, and essentially, generally speaking, all of these owners need to be issuing a personal guarantee. And Jennifer, I don't know if you have anything else to add.
Yeah, it is definitely on a case-by-case basis. So, and sometimes conventionally, it can be looked at different. So there's two things at play here when you talk about small business loans. It's either a regular conventional loan, which follows lending institutions' own credit policy, and then there's the SBA, which we follow their rules. So, you know, it shouldn't keep you from applying when you have those kind of questions. And you can talk to a lender and see, you know, what is required by their according to their policy and guidelines.
Over here, next slide.
Hey, can a franchise business qualify for an SBA loan?
Yes. So the short answer is yes. Yeah, that's a good question. Yes. Again, not to get into the weeds of the wonkish component, but SBA has a directory for all approved franchises. And if your franchise is not on the approved list, if you're not, work with the respective lenders, and they can get it reviewed to see if you could get approved. But by and large, franchises are allowed. Yes, question.
Yes, thank you for the presentation. And I want to ask if it is structured as a business credit line, or it's like a mortgage. So basically, can I take $500,000 first year, just pay the interest for that, and but have the $5 million for the whole credit line? Because the business credit line works that way. I have the whole amount, but I just pay for what I borrow every year, or if I repay back, I pay less interest.
Jennifer, you want to take that one first?
So you're talking about a business line of credit that.
Is it like the? I'm sorry. Is it like if I borrow $5 million, this is like a huge mortgage? I pay like one big payment every month, but business credit line works the other way. I have the $5 million in the bank, which I can use, but I can use only $100,000 this year or $500,000, and I only pay interest on
Okay, yeah. So with a credit line, you basically there's a period of interest only that you would pay on what you use. And lines of credit, it's a different lending criteria. It's usually it's balance sheet based. So it's more for seasoned companies with heavy ARs or inventory, or it depends on what the line is being used for. So yeah, you would only pay on what you use. Usually they and SBA doesn't have a line of credit that goes that high. The highest line of credit is $350. So if you're looking at $5 million, it would be on a conventional basis, and it varies from bank to bank what the repayment ability is, but typically it's annual renewal. So some lending institutions, they have you redo the documents, and there's some repayment to bring it to zero and then start up again. So it depends. It depends on the lender.
Next question, sorry.
So I saw one of the rules was that you have to be an operating business in order to get SBA approval. With startup, how do you determine an operating business? And the second question, I guess it's completely separate, is there any favored form of formation of a business? I mean, in terms of sole proprietorship or corporation for an SBA?
Okay. So the first question regarding startups and repayment, and so how do I determine it's operating? Well, when an applicant comes to a lending institution and applies, we kind of see what stage they're in. You can definitely start the application process with you not ready to go for sale or operating. The funds will be available once there is something to offer, because the key is repayment ability. As soon as profits can start, that's when so if you're in a research and development stage and you need, this is just on my own lending ideas, is that if you have a development stage that takes maybe years, that's maybe that's not really a starting point. So it's when you're ready to go and you may need a couple months for to collect profits and whatnot. So so I hope that answers.
Yeah, that's good.
Okay, and the second one is what type of business entity is, if it's favored or not. Not typically. It depends on, it really is up to the individual business owner to determine the type of entity that they want. We really don't have a preference or say that's personally, or through my banking experience.
Question, Eric Little.
So you may have already answered this, but I'm wondering if there's an exception on a personal guarantee if you have collateral, inventory, or accounts receivable. Is that an absolute rule that there has to be a personal guarantee in order to get an SBA loan?
So some form of guarantee will always be required, whether it be a full unlimited guarantee or a limited guarantee. If you are the rule of thumb is if you're a 20% or more owner, typically it's a full, unconditional, unlimited personal guarantee. That's a standard practice not only with the SBA loan programs, but it tends to be the standard practice in the commercial business lending world, even with a conventional loan program. So a personal guarantee will always be required, at least from the SBA standpoint. Collateral helps, right? But it doesn't replace the need for a personal guarantee. And Jennifer, do you want to maybe chime in a little bit on that too?
No, that's pretty across the board on when looking at credit. So and when we do take a personal guarantee, we do look at credit. So a lot of times, a personal guarantee can add strength to the whole entire credit. So it's looking at the whole picture.
And somebody can actually add or be a personal guarantor that's a non-owner too. Kind of like in the consumer world, we call those co-signers, right? So somebody could be a personal guarantor that's a non-owner that wants to add maybe further strength to the loan request. So, yes, next question. Oh, Anne-Marie.
What's the difference between a relationship banker versus a transactional banker, and how does it benefit the client or the business owner to know who they're dealing with?
And that's a good question. Maybe I'll stab it first and then Jennifer. So I need to be careful with this question, right? Because on the government side, we need to be impartial with all of our approved lenders out there. That being said, certainly you know that every lending institution has a different appetite and a different culture. Some are transactional based, as Anne-Marie mentioned, and some are more relationship based. That's not to say that one's better or worse than the other. That's just the more maybe the cultural mission statement of that particular respective lending institution. So from there, you just have to make a determination. I think this is where the shopping comes into play, you know, where you're at. And maybe I'll just leave it at that for now. And Jennifer, you could chime in on your thoughts.
Well, in regards to an SBA loan, as a lender, there are no restriction or covenants or type of must to build a relationship with a lender. So there's no obligation, and there shouldn't be in the SBA lending. On a conventional side, based on different banks' policies or just overall view of the relationship, they may require some type of deposit relationship. But that's also an advantage for the small business owner because it's building a relationship. And with community banks, they are relationship focused, and you know, it's just a win-win for both. But again, back to SBA, it's not a requirement. I have seen a lot of SBA loans that are transactional, so it just depends on the program and the institution.
And I might add that there is a cultural push right now from DC down, from the White House down, to encourage the emphasis on more community-based lending, more community-based loan programs that are serving the underserved markets. So if that's the case, then you, like Jennifer mentioned, you may want to maybe look into some of the lenders that might be more relationship based, right? Because there's a dialogue as opposed to just a cookie cutter process that, hey, you fit, if you don't fit, sorry, see ya, right? So there is a push for more community-based lending to occur. There's an actual like encouragement now to support the credit union industry in the country because they have largely been ignored, especially in the business and commercial lending side. So those are some points to kind of keep in mind, and hopefully that answers your question as well there. Yeah.
Two more questions back here.
Yes.
You mentioned the FHA loan and the similarity between.
Yes.
Typically, and correct me if I'm wrong, there's a minimum credit score that's required to even apply. With the personal guarantee portion of this loan, is there a numerical minimum that is required for the personal aspect of the application process?
So I'll give a high level answer, and then Jennifer, you can kind of describe maybe what you're seeing internally at East Central. Try not to get too muddled when it comes to consumer lending principles and business lending principles, right? In the consumer world, it's all about your FICO. It's all about your Fair Isaac score. If it's at, the general rule of thumb is what, 640 satisfactory and up, right? 640 to 680 satisfactory, 680 to 720 is good. There's different matrices, right, that tell you that. Sure, personal credit score is important in a business lending underwriting criteria review, but it's not this exclusive factor, right? There's probably a heavier weight in, say, a business plan if you're more startup. There's maybe even a heavier weight on, if you're a current business, on your cash flow operations, your current financial operations and cash flow. As Jennifer mentioned in the presentation, business lending is about cash flow lending and having maybe looking at what other collateral to sort of pledge. So don't get stuck on the fact that maybe there's just a one exclusive criteria of personal credit score. That's not the do or die. That's one component of a lot of several other components, probably even more heavily weighted on the business operation and the business plans.
That is a very big question because I do feel that sometimes people get discouraged from applying for a business loan because maybe of some credit hiccups, personal credit hiccups. And that's one of the things about turning to the SBA loan program, where a lending institution might have within their policy a certain credit score. So that's one of the things that we can turn to the SBA and seek a guarantee and have the applicant apply for a loan under the SBA loan program due to maybe some credit issues, personal credit issues. But with a lender, we look at the whole picture. So some things, again, as Andrew mentioned, there might be some strengths in the business to kind of mitigate what was on the personal side. Also, that's the beauty of talking to a lender one-on-one, is because sometimes people have things come up. I shouldn't say problems, but things come up and things can be explained, and it can be just something minor, and a lender will take that into consideration.
And actually, just to add to that, largely speaking, this kind of goes back to Anne-Marie's question, that business lending as a whole is more relationship based, as opposed to consumer lending, which is more transactional. You go to, I don't know, a website for an auto loan, it's very cookie cutter, it's very transactional. They don't see a face, they just see the credit score and maybe your W-2, whatever your pay stubs might be, right? So business commercial lending is always largely going to be more relationship based.
Last question.
Yes.
I'm going through the process right now. Two parts. One is, how important is it to formalize your business plan versus just having the components in the loan package ready, like your financials, your team, etc. So that's the first. The second is, how advantageous is it to be women business owned, particularly when SBA has the women business center, or in general, what is the advantage, or is there an advantage for women business owned?
Okay, so I'll take the first, or I'll take the first stab here on the business plan question. It's best to have a fully executed, fully functional, fully thought about business plan before you approach a lender, right? That's where we will, I would almost say, work with a lender like the 3 lenders here, for instance, Jennifer at East Central, and they can actually, in conjunction with the SBA, match you with the Small Business Development Center or the other resource partners in order to help you create that robust maybe business plan and make sure all the T's are crossed, all the I's are dotted before you approach a lender. You want to be in the best state possible to present a good presentation of a loan request to a potential lender. Your second question is about how important is today's climate with women-owned businesses, is kind of roughly speaking. So the climate is actually very good. The head administrator right now for SBA happens to be Linda McMahon, right? She is championing small business, women-owned small businesses throughout the country. And there's a push, there's a definite aggressive push to encourage more small business lending and for women-owned businesses. So right now the climate is certainly very, very conducive, very, very favorable for lending for small businesses that are owned by women. The criteria may not be all that far different, but we can at least assist from a standpoint of figuring out what the best programs might be from that standpoint. So it's a good climate for that secondary question of yours. And Jennifer?
Regarding a business plan, as an underwriter, I do look heavily on a business plan, especially in a startup where there's no historical financials. So it's rely heavily on projections. So your month-to-month projections to see, maybe in the beginning it's not going to take off so well, but just to see your thought process and assumptions too, to see how did you get that figure? What are you doing to get that figure? So in a startup, definitely a business plan is key. And I don't recommend that people go out and hire someone. I've gotten a business plan one time that someone hired someone to do it, and it had a different company name, and I was like, well, this person did not think this business plan on their own. So, not kind of a small red flag. And that's.
And if you can at all help it, don't pay for consulting services for your small business. These resources are made widely available through the government, free of charge. And these are not government employees like myself. They're actually capable private sector people. Okay, those who can't work at government. No, I'm just kidding. No, but seriously, the business resource partners right now within the small business community, funded in part by the government, can provide you all the counseling, advisory, tactical, hands-on assistance, 100% free of charge. Best kept secret. That shouldn't be a secret in our country. So thank you very much, folks, for your time.